Hello traders and investors, I'm LA Little and this is your weekly NeoTA wrap, where we take a look at these markets and we do it from a neoclassical perspective, meaning each time we ask ourselves what happened last week, what does it tell us about the coming ones. Do the show once a week every Sunday evening, broadcast at or before 10 o'clock Eastern Time, archived on YouTube under the channel LA Little. As far as what happened, it ended up being a whole lot of nothing. It went up, it went down, you ended up in the same spot. It didn't really change. Down on the year across the board with the exception of that NASDAQ. Only one holding higher so far. Down as much as 7% on the Russell. So if we move over, take a look at the S&P 500. Of course, we had big volume on Friday. Big spike up in volume on that options expiration. You're down here playing with these lows again, right? Coming down into them with volume on this time frame. If we switch to the weekly, there we're going to see the same sort of thing we've been seeing, and that is that you've got a range trade going on. That range trade is roughly from this area up and then down beneath it. You've got two ranges that have set up. And it's coming down here to test this area again, and this is the key area. That key area is off this high of the low, right? That volume there was fairly heavy. You're coming into that price point. Top of it is 1993. We traded down almost to the penny of that low, or that high volume low's high. Closed about, looks like about 8 points, 9 points a high. Well, it's about 12 points a high of it. So you come down, you're doing huge volatility again. And I was pointing out to members today in one of the broadcasts, that if you look at this volatility, from about here over, right, it's been huge, right? You've had more days up and down 1% plus, and on a weekly, 1% plus, than you've had for years, actually. It's been since the debacle back in 2007 and 8 that you've seen this kind of volatility come in. We probably saw some decent volatility in that August 2011 drop, but it's constant and it just keeps coming, and there doesn't seem to be a stop to it. As far as what does this portend? Well, if you look at the volumes coming in, you're not coming in with as much volume into that high. That suggests this thing's going to try to flip around again and go back the other way this week. If we move over to the NASDAQ, and on the NASDAQ, what we're going to see there is the same sort of scenario, where this thing's coming back, volume expands tremendously. If we pull it to the weekly, you have the same sort of deal, right? That high of the low is 48.24. You got as low as 48.71. So this one could stretch a little bit farther. But you can see just looking at the volume bars, it's still not doing as much volume as it comes back in to that area. So volume, not suggesting you're going to break it down at this particular point in time. If we move over and take a look at the NDX, you got the same sort of scenario there. Coming back on the daily, coming back on the weekly, a long way away on this particular index from the highs of the lows. You got that much distance, and that's because the NDX has been the leader on the way up. Russell has been the dog on the way up and the leader on the way down. Now the Russell broke 3 swing point lows. It broke them in tandem last week. So you had one here, one there, and another one there. You broke up underneath them. You bounce back up into them, and then you turn it around, right, and head back down the other way. That's a retest, regenerate on the bearish side. And so it's this particular bar. It's coming back up. You actually had another one over here. I didn't point that one out. Both of those, it comes back up into them. Can't get over them. Heads right back down. That's trying to regenerate now to the downside, and that downside's a pretty big one if in fact this thing gets going. And the reason for that is you really didn't have anything on the way back from here to there. Was straight down, bounce up. Now you're trying to do that regenerate to the downside, and if it in fact does that, it's going to be a big move to the downside, as you can see on these charts. And the Russell is the one that's most worrisome. If you look at it on the weekly basis, you're down here playing almost with the lows from August. You're almost into them already. Now, it did undercut, did a hammer reversal, and got a big bounce off of that. If you pull over the weekly chart, that low from October last year is not that much farther down. 1040, we're trading at 1121. 80 points is still a good piece to go, but if you start breaking out these lows, you're going to be looking at that price point pretty soon. One other thing that we haven't talked about, and because I do neoclassical, I'm not that concerned with it most of the time, but you've got a head and shoulders type situation going on in a bunch of these indexes and sectors, where the volume situation is not ideal, but you actually have lower volume on the top, and so far a little bit of escalation on the way down, but we haven't seen it since. If we start seeing escalation in volume on the way down, this pattern will take on more significance, and you'll probably see all the classical guys start to talk about it. If we look elsewhere, if we move over to Europe, this is where we're going to see the action this week. And if you remember last week, pretty much all week long, I called out this price point here is where the test would be. We went right into that price point exactly as called, hit it, came back off, volume expands tremendously as we come off of it. Now the test is going to be, can it get back into and underneath this gap, which is this support zone that's set up here? That's going to be the key area. If it does, right, you potentially have another ABCD structure to the downside. What would that look like? Well, it would be from here down, back there and then back down again, which would take you way up underneath breaking down those highs from before on the weekly basis. So if we switch our view to the weekly, what you can see is a big spike down. Volume expands as we go under it. We bounce off of it. The breakdown bar here is this high price point of 10,384. Got over it for one. Was it one? Yeah, I actually got over it for 2 weeks, and then came off of it again. So in this time frame, right, it doesn't look that bad. So in other words, you come down, you wipe it all out. Now you've kind of got an ABCD structure going to the top side, potentially, if this thing can find itself, and that could take it all the way back up towards those highs from last, it was about April of last year. So that's if you want to look on the bright side, that's the bright side of this. Of course, what it has to do is start to do that here on the daily, which means this is going to have to find support and flip around and set up an ABCD structure here to get it back up to this breakdown bar, and that price is 11,318. Right now, it's a little too early to tell looking at the index itself, but actually if you go over and take a look at the currencies, because the currencies are driving everything now, and given what happened with the Fed last week, I suspect they're going to continue to drive the action. The FXE tried to come down off the Fed news and break down that breakout area off of Draghi's disappointment. The low there was 105.70. It got down to 105.78, bounces off of it, and so this thing is range trading at worst, it looks like, still off of this big bar. And so I suspect what we're going to see is this big range stay in effect, and this smaller range initially hold prices for a while longer. If they can shoot this thing out the top, you could get a pretty good short cover and rally, because most people are short this particular currency. Of course, if they work it back down and start to fill this gap, then it's it's a totally different story. So for now, looks like a bounce. If the currency is bouncing, that's going to actually put a little bit of pressure on the indexes in Europe. If the euro is moving higher, if the euro doesn't skyrocket and stays in this smaller zone, then the currency isn't going to have a huge headwind on price there. So right now it looks like we're going to get a little bit of a bounce on the currency, and potentially a bounce in the equities themselves. Part of what's going on also is the yen. Now the yen had shot back down and then got a huge spike up when the Bank of Japan decided not to do anything with expansion of the QE program there. And if you look at this on a weekly basis, this continues to test higher, and I suspect it's going to get higher yet. If all that is true, if the euro is not going to move appreciably lower, if the yen is going to try to move higher, the dollar is going to work back down, and if the dollar is working down, that's probably going to help U.S. equities and probably going to continue to help equities worldwide. So currency-wise, doesn't look too bad. This week actually looks like we may see a little bit of a reversal where all these commodities that keep getting crushed start to try to lift again as they continue to do. As we rotate back and forth, this is going to come back in and test off this swing point low. So this would be a bearish retest, regenerate on a daily now. And at some point, one of these is going to actually get above it, right, and stop this downtrend and make it more like sideways. So eventually, if you get the retest regen that can't hold price lower and push it down again, then you're going to turn, more sideways than we've seen instead of this downtrend. But right now, it's the retest regen. It's off this big bar, and I suspect that's what we're going to see happen this week. It's going to try to get into it, and then if that happens, we're going to see the weekly as well get into the weekly retest regen. Base building on these is going to take a while. It's not going to happen, overnight. In other words, to get this thing to really turn, it's been years. I don't know if it's been years, but it's been a long time coming down, right? You get some sideways stuff, you get a downtrend. You sideways stuff, more downtrend. To get this thing to go higher and to really get it to shoot back up, this thing's going to have to build a base. It's going to have to wallow around in this area for quite a while. And so that's what you're really looking for in the commodity space. And the biggest culprit in that space, the one that's hurting the most, is of course the oil market. That one can't find a low, just keeps dribbling lower. West Texas Intermediate was down in the $34 range. Goldman's still calling for $20, I believe. And right now, oversupply is huge. And these stocks and this particular commodity simply can't find a bottom. That's worrisome in how it affects the junk bonds and how it affects the mental aspect of this game. Junk bonds did levitate a little bit last week. They undercut under and back over. This actually looks like it's going to hold, so that worry is kind of off the table right now on a very short-term basis. But if you look at it on a long-term basis, these are some ugly charts. They did get huge volume expansion. Usually that creates some sort of a range trade. And so my guess is that you're probably going to see a big range develop off the swing point low is the high, down to these lows now, and range it for a while. And if it does that, then that will take some of the pressure off the worries of complete debacle taking place. So what do we got here? It looks to me like Europe's going to probably hang tight, maybe try to rally a little bit. Commodities probably going to catch a little bit of a bid off of a stronger euro. U.S. dollar probably going to get a little bit weaker again this week. That should help U.S. equities and to some extent help European equities as long as the euro doesn't make a huge move up or down. And that, to me, says you're going to try to get a slow, grinding bounce take place this week. That's it for tonight. As always, I thank you for joining me. Have yourself a great one. Take care, and I'll see you next time.